look, community banks are the lifeblood of America, right? When you think about how individual consumers and businesses depend on community banks on a day in and day out basis, you think about how community banks have really leaned in and provided credit at times and liquidity at times when that's been needed. Lean in during the Paycheck Protection Program as an example, right? There's just, the community banks are always there to really be able to make sure that the community can thrive and succeed.
One of the things that we're concerned about desperately is just banks seem to be destroying each other by mergers and acquisitions. If we get down to a point where we get too few community banks out there and everybody merges up for scale, okay, it's going to be this level against the big banks, and that's not going to work either.
It is a real opportunity for a lot of our institutions to kind of think about, hey, how do I become a sponsor bank, and is the juice worth the squeeze? And what we've found, and I think, you know, you guys have been great at working with us on this, is there's a lot of fintechs out there, and they're basically dialing the same banks to get that support. So I think we're hearing that from the fintech community. They'd love to see that list grow.
What is preventing more sponsor banks, which is the number one thing we need, is more sponsor banks.
Yep. Mm-hmm.
And what's preventing them from entering the game, or what slows down the process of them going, hell yeah, I'm on board. Doesn't sound so tough. This complicated conversation and everybody, well, I'm a fintech and what's an ad?
Well,
it's like,
guys, I'll give you
an
easy way.
It's not that hard
to
get started.
And they need to find ways to evolve to continue to serve those clients better, right? You know, I think, you know, Mike, as I look at FIS, we're in very much a similar situation, right? We provide a lot of the piping that keeps our economy working and keeps money moving. And we need to continue to learn to evolve quickly and more innovatively to try to stay relevant, just like those community banks are struggling to do. So it's a very similar situation we're in.
I tell you guys, banking as a service, banks, number one on every category of earnings you could ever think of as a peer group. Similarly, if you look at direct banks or Affinity, right? So I like Redneck Bank, All America Bank. They're cool. Again, those as a peer group are right in there in that top 1 percentile.
Yeah, geography is no longer a boundary.
I think people look at fintech versus banking, and we have the risk conversation. We should probably have the inclusion conversation too, right? I think the fintechs by and large are really trying to make a difference there and doing a great job for underserved groups.
There's so many of these fintechs that are, you know, everything is based on a niche, right? And so when their niche is focused on a underserved group and they can do it at a large scale, it works for them. But what really, for society, what that ends up meaning is that we're expanding the banking services out there. So it's a good cause and it's a good thing.
It feels like when we talk about community banking, it feels like community just not tied to geography.
We've been looking at both paths, you know, sponsor bank versus direct bank. And, you know, we're a $170 million bank in Sweetwater, Texas. We have 28 employees. You start to educate yourself on the sponsor bank. You know, it's not any different than opening another branch. It's a digital branch. You've got to employ some different technology, which, you know, can be a little bit of a burden. But as we said earlier, is it any more burden than adding another branch location in a market? You know, whatever, 20 miles, 50 miles from your home location, and bringing on the staff that it requires to operate that branch. You're talking about a multi-million-dollar initial investment for a branch, plus a minimum of $500,000 in operating overhead. When you can look at at the direct digital bank or a digital branch, whatever your favorite term is, and think about a $100,000 initial investment and overhead that grows with you over time.
We have, zillions of fintechs trying to get into this space and a very few number of sponsor banks. It's very, very easy to become a sponsor bank and very, very inexpensive today. Now, don't go ask somebody, how'd you do it 10 years ago and how'd you get started? That was a nightmare.
It's difficult.
But today,
It's
we got one we set up a couple of weeks ago, $100,000, and guys up and rolling. Okay. It's not that hard. That we can help you find them. They will come to you once they know you're there. This is not hard business to start.
And more sponsor banks is good for community banking.
So here's the deal.
Okay.
These little entities, companies are just like a business client. Okay. So they're just a business client that takes money away from JP Morgan and Citi and those guys. You make money doing it. So if you want to kick their ass, become a sponsor bank. It helps everybody.
To the community bank like us, they're a friend. If you're a top 5 bank, they're full, right?
I love it.
Yes.
Yes.
Yeah.
That's the thing.
You want to find
I think
become a sponsor bank.
There you go.
Traditional banks need to innovate today, otherwise they will not be around tomorrow. Period. End of story. Now that is sometimes controversial, but I'm very proud. I'll say it to you and I'll say it to traditional bankers. You've got to think about what the future of financial services looks like. And if it's not about what banks need for banks, it's what consumers want from their banks, period.